and answer. And all through this process of learning, Mr. Rona Elijah would be taking us through the process of this learning. And also, we there's a whole lot of questions in pack because we sent the Google form. Many people asked question, and that does not still deter the fact that you can also ask question right here. When you have question, you just raise up your hands and I would identify you, I would call you, you would ask the question. And it's an interactive class. Everybody is here to learn. And yeah, I would also tell you to take notes too, because it's very much important. So Mr. Rona, you're welcome. You have your section.
Okay, thank you so much, Joshua. Hello, everyone. Good afternoon, and welcome to today's class. Hey, Wilson, please permit me to share my screen. Hello, Joshua, can you confirm if you can see my screen or not? Hello, Joshua,
Yes, I
or
can see
anyone.
your screen. I can see your
All right.
screen.
All right, thank you. So we're all welcome to today's club. So due to the number of questions that we had, that is the questions that we have filled in the form, this session will be as brief as possible. Yeah, we intended to recruit new people into the world of investing, right? But it seems that based on the questions that we asked, a lot of you have already started. So, no need to bore you with the basics of the basics anymore. So we'll just rush through them. Then we'll focus on the questions. So just after the class, when we start addressing all the questions, if you have any question you want to ask, you can drop it in the comments or you can raise your hands. During the class, however, if you have any questions, drop it in the comments so we do not distract others. Thank you so much once again. Yeah, so as you can see, the content is very simple. What, why investment is. Then we look at some conventional asset classes. We look at the risk involved in investing. So after you consider the risk, we'll look at basic portfolio construction, then conclusion. That's all for the session. So what is investing? In simple terms, it's just like delayed gratification. The difference between saving and investing is that you are delaying your spending in both of them, but there is gratification in investing. Why? Because you tend to earn more than what you put. In the case of saving, you either collect exactly what you put or slightly more or slightly less. But in the case of investing, you are looking for something way higher than what you put. So that is the delayed gratification. That is, you have money. Instead of you to use this money to buy breads, you use it to that you instead of you to buy breads with the money and eat the breads, and you decide to buy bread, but instead of eating the breads, you hold the bread a little, then you sell it. So you are now investing in a grocery store, right? So that's a grocery shop investment. Or you have money, you can use it to buy one stock or one specific asset class, such as goods. Now you cannot eat that asset. And the purpose of you buying that asset is not to eat it, right? So that is the delay we are talking about. The gratification has to come when you sell the bread or you sell the goods or you sell whatever you invested in, you now make your returns and your returns is higher than what you put into the investments. You get it? So why do we invest? We invest for multiple reasons. One is financial discipline. So for those of us who, of course, everyone here is working. When you started working, I don't know if you had the same experience as myself some years back, right? At the end of the month, you get your salary or you get whatever you are doing, whether you are working in salary-based company or you are a freelancer, as the case may be. So at the end of whatever period, you get money. Then maybe 2, 3, 4 weeks later, you start wondering what to use the money for. So that's simply because perhaps you have spent the money anyhow. You can't really document it. But when you invest with that money, you can pinpoint where that money went to, right? And the money will be working for you. What about inflation rates? Today, you can buy, let's say, one bread, right? It's just an assumption, right? But you can buy bread for 1,000 naira today. Considering the way prices of things are either increasing or decreasing, do you think that by this time in 2 years' time, that exact bread you bought 1,000, do you think it will be worth exactly 1,000 in 3 years' time? If for any reason the piece of bread will be worth more than 1,000 naira in 3 years' time, but that 1,000 naira you held in your hands today, you still hold it in your hand in 3 years' time, it simply means that that 1,000 naira has lost value. Why? Because you can no longer use the same 1,000 naira to buy exactly what you would have used it to buy 3 years ago. So this is where inflation comes into play. So what do we do regarding inflation? To help you beat inflation, just the way the prices of things are increasing, that is how you need to increase the worth or the value of your money. And how do you increase the worth or the value of your money? Remember, it's not by saving, it's by investing. We also have passive income. So you invest in this company, you invest in that bonds, then at the end of the month, the quarter, the year, whatsoever, you get dividend payments, you get coupon payments, you get interest payments. These are passive income that you did not work for. For many of us here, we have retirement, right? So these pension schemes, right? So some invest in whatever pension scheme of their choosing, right? So that is still a form of investment. Why? Because at the end of the your working duration, you get your pension as opposed to collecting the money now. So these are different reasons why we invest, right? So how do you invest? Basically, I gave you the underlying principle. You use your money to buy something, but not for the purpose of spending it, but for the purpose of holding with hopes that what you bought will significantly, or okay, significantly is correct, increase in value. So when you see one somebody's company or you see that somebody has the potential to do well, maybe in your family or in your streets, now you give this person money, take this money, use it to do this company or whatsoever. At the end of a few years, that person will come with a lot of money back to you, come with a lot of gifts. So you got more than what you put into it. What about you lend out your money to somebody or to the government or to a company? At the end of any given duration, the government, the company, or the person you lend the money to, they will give you interest payments, coupon payments, as the case may be. So this class now will show you how to lend money in how to spend your money for the purpose of conventional asset classes. So if you want to lend money, we'll show you how to lend money to the government or a company. If you want to buy a stock or whatsoever, we'll show you everything. But briefly, remember, so these are some conventional classes for you. We have stocks, we have bonds, we have treasury bills, we have mutual funds. Of course, we have others such as commercial papers. We'll discuss them later. So what are stocks? A stock is you being, a stock is your equity, your ownership in any given company. So that's just it. So if you have, you founded your own company, for example, or you founded your own store, it means that you are 100% the owner of that store that you founded. But just imagine a situation whereby, okay, you want to expand your shop, right? So perhaps your shop was just in the corner of a street, but now you want to turn it into a mall as big as ShopRite and other very large malls. But now you do not have sufficient money for that. What do? You can either borrow or you can look for investors. So now we are talking about the investors here. So when investors come in, they are coming in to buy your stocks. So they are coming in to buy part ownership, part equity in your company. Likewise, you can invest in multiple stocks. They are publicly listed stocks. Here in Nigeria, our major exchange is the Nigerian Stock Exchange. And in that exchange, we have companies such as MTN, Airtel, Presco, GT Bank, UBA, as the case may be. So when you see a company is doing well, you can likewise invest in that company by buying a stock, right? So let's just end it here. I don't need to talk about primary and secondary investments. So bonds now, remember when I gave you the example of your stock, we said that people can either lend you money or invest. So this stock is the part of investing in your stock, in your company. The bonds now, It's now like lending your company money. Mind you, bonds, you can either lend money to the government or you can lend money to a company. When it's a government bonds, we call it a treasury bond or just government bonds, right? Then when it's a company you are lending the money to, it's a corporate bonds. So bonds usually comes with coupons. This is the percentage amount they are willing to give you according to the agreement. Some will give you once a year. The federal government of Nigeria, they have the savings bonds that will give you your interest quarterly, as the case may be. So it's lending money. Treasury bills are just like bonds. However, they are short term, usually below 1 year. So for people who are asking, hey, this money I get but I know I won't make use of this money until 6 months' time. What do I do with it? If you do not have anything good with it, instead of keeping it in a bank, you can keep it in a treasury bill as the case may be, because the rate is slightly higher than the rates your bank will give you for saving money with them. Now we have mutual funds. Now, just in case you do not know which stock to invest in, which bonds to invest in, which treasury bill to invest in, which commercial paper to invest in, mutual funds now pack different assets or asset classes into one vehicle, and now you can invest in it. Let me give you an example. So let's say that me individually, I'm an expert, right? I have analyzed so many companies and so many bonds, and I want to invest in all these companies. Then I make an announcement. If you want to join me in investing, bring your money. So both yourself and a whole lot of other investors, we pooled funds together. Actually, mutual funds are types of collective investment schemes. So we all pool funds together. Now, these funds that we have, we now use some to invest in stocks in the best companies according to our analysis. We use some to buy commercial papers as the case may be. So mutual funds, they help you to invest in multiple assets at once, which gives you diversification. Still on the mutual funds, right? The name of a mutual fund is dependent on what the fund is investing in. So, for example, if the mutual funds mostly invest in treasury bills and commercial papers, so just the way treasury bills are short-term government bonds, that is how commercial papers are short-term corporate bonds. So if it mutual funds mostly invest in all these short-term assets, securities, such as commercial papers and treasury bills, the mutual fund is investing in the money market. So we call it a money market fund. If the mutual fund mostly invests in stocks, it's an equity fund. Mostly invest in real estate assets such as lands, office buildings, infrastructure, etc. You can either call it an infrastructure fund or a real estate investment trust. Mostly, okay, so the mutual fund is split between stocks, bonds, and different asset classes. You can call it balanced funds. We have the Sharia compliant funds for if you are Muslim, for example, you do not want to invest in companies that produce and sell pork, that is pig meat. You do not want to invest in companies that produce alcoholic drinks. So these mutual funds, Sharia compliant funds, they look at the stocks, they look at the bonds and different investments that if you invest in these assets, they in no way will hinder your faith as a Muslim. So those are the Sharia compliant funds for you. So a popular example of what Sharia compliance funds will invest in today is the FGN Sukuk bonds, right? That one helps with infrastructure. Now, there are different types of asset classes. So, for example, that is the asset classes that we did not consider. We have commodities, looking at gold, looking at silver, looking at diamonds, etc. We have cryptocurrencies, we have derivatives such as the futures trading, etc. Then we have private equity and so on and so forth. So what are some risks in investing? So we have the liquidity risk. So in the case of stock, before you invest in any stock in Nigeria, because this is actually a problem with a lot of investors, they are complaining. You buy the stock, A day will pass, 2 days will pass, nobody will sell it to you. Then let's say miraculously someone sold the stock to you. So now you have the stock. You've made a little bit of profit. You want to sell it. But now you see that there's no buyer or nobody wants to buy, as the case may be. What that risk is liquidity. Why the stock is not very liquid. So please look at my screen. Let me show you something on Assessworth here, right? Um, Before you buy any stock, Assessworth will help you significantly. So let's look at something. Search for the specific stock. In this case, let's say you like this BUA Foods. You've heard of BUA Foods, right? That is BUA Foods, that man who just gave Super Eagles some money, right? So look at BUA Foods here. You are seeing this flag. Click on this flag. It is showing you that the asset is illiquid. Why is that? What do we mean by illiquid assets? Illiquid simply means that there are not enough shares in the market. That is for the markets to buy and sell easily. There are not sufficient shares. How do you confirm this? Scroll down, right? And look at this price statistics section here. Sorry, I don't know, someone is making noise or something. Look at this price statistics section here. Click on click more. So look at this BUA Foods. Out of 18 billion shares that BUA Foods has, it gave only 850.58 million shares to the market, which is BUA Foods gave only 5% of its stock to the market to trade. So what this simply means is that BUA Foods did not give a large percentage of its stock to the market. Let's look at something like Airtel. Likewise, Airtel has this flag as well, right? Scroll down, look at it. So even if Airtel gave 13.37% of its stock to the market, see, in 1 year, because we are currently in 1 year, the duration, in 1 year, a total of only 0.02% of Airtel's outstanding shares has been traded. That is, Airtel has over 3.8 billion shares. But in 1 full year, the market has only traded 0.02%. This simply means that no matter how good Airtel is as a company, no matter how, in fact, the company is the best thing after Christmas, if you buy the stock, you can get stock. Now, just in case you do not know the stock, that you do not know the stock to buy, there's a way for you to still know how liquid it is. In this research, right, click on Hall of Fame. That is in this Hall of Fame, right? Then select free float. It is the last here. You can come to lowest to highest here. So look at this company, BAP PLC, 0%. Ronkers, 0% free float. Infinity, 1.259%. BUA Cement is here. So you'll actually see all the stocks with low free floats or all the stocks with high free floats. Mind you, this ASO savings has been delisted yesterday. So you see the stocks with high free float as the case may be. Moving on, credit risk. So now you heard that this company, they want to borrow your money as in the form of commercial paper, right? Then how likely can the company pay back your money? So that is the credit risk or a bonds, for example. So let me give an example to some of us here who are already slightly experienced. We know what happens with FitSyn. You know FitSyn Healthcare, right? Where they recently they did the rights issue, right? If you go through that rights issue of fitting, you will see that a significant amount of the rights issue is to pay back their loans that they were owing. Now, if you go to the loans that they are owing, a significant amount of that rights issue is from the commercial paper that they did, should be either last year or 2 years ago. So the billion-dollar question was, if not for the rights issue, would FitSyn be able to pay back the commercial paper as of when due? So these are some things that investors consider, and thankfully, the investors, they subscribe to the right, so FitSyn can go ahead to clear that loan. But as you can see, these are risks that if you don't open your eye, you will not see. So credit risk. Now, the lack of understanding, before you buy any specific stock, for example, you need to know what the company does. There are some people who, if you ask them now, what does Ella Lakes do? They will say that Ella Lakes is an agricultural company. Fine. But what does Ella Lakes do? They will say, okay, fine. They do palm, they plant palm. But is that all? Because there are a lot of Muslims today who say that they do not want to invest in what will disrupt their faith or what will hinder their faith in any way. So because they want to invest only in Sharia compliance companies. However, these same persons will invest in an Ella Lakes because the company is projected to do very well, not knowing that Ella Lakes, a proposed significant part of its revenue will come from piggery. They already rear pigs, they already sell pigs. That is one. Then the droppings of the pigs is what they will use to boost the fertilizers of their palm plantation. So a significant part of their palm plantation revenue will come from the healthy palms fertilized by pig manure. Then the expenses that they would have spent to buy normal fertilizer, they won't spend it. Why? Because of the pig manure. So as you can see, there is this synergy between the piggery and the palm plantation, and they also get significant revenue from the piggery. So if you really say you understand the company and you are a devout Muslim, should you invest in that company? That answer is left for you to decide. We have high volatility risk, such as when you are trading securities such as stocks, cryptocurrencies, some funds, they are quite volatile. Let's look at something. Volatility looks at the fluctuations of a stock's price. So let's look at, for example, MTN, right? Okay. No, instead of searching for the MCN, come to the technical analysis page, right? Select assets versus index. Then maybe let's look at MTN, for example. I'm not, I just want to look at okay, so the risk level. While the general market is around 8.94% volatile in terms of its risk level, MTN is around 34.67%. So MTN is riskier than the market. So this is some things that we consider. So look at in a one full year period. In the one full year, we observed that the entire market, which is NGX All Share Index, when it dropped, starting at October 24, 2025, then it recovered in January 2nd, 2026. The market pulled down by 9.2%. But in the case of MTN, its own pullback started August 28th, 2025, and recovered, sorry, October 28th, 2025, then recovered December 12th, 2025. MTN's whole pullback was 17.46%, which means that MTN has a higher likelihood of pulling back lower. That is, you losing your money is higher in MTN than buying a fund that tracks the Nigerian All Share Index. So these are some things to consider. What about regulations? Before you buy stock from any stockbroker, or before you buy the mutual funds from any funds manager, you need to ensure that that stockbroker or funds manager is licensed with SEC. So it's very simple. Just on Google, right? Just say license, stockbrokers in Nigeria, right? NGX usually has the full list here. So when you click on this, apologies, it will take time, but even Google here will show them to you before that of NGX loads. So this is the page for NGX. Apologies for my network. So, but this page here, okay, so here you go. You have it show you the one that is active, the one that is not active anymore. This is ARM. You can always search. So, for example, you can search and you see them. That's it. So now that we've we've understood the risks and we know the basics of investing, how do we construct a portfolio? Mind you, a portfolio is like a combination of some asset assets or asset classes. As a new investor, you do not want to buy only one stock or only one asset class. So as a rule of thought, especially for new investors such as yourself, do not put over 75% of your money in one asset class. So if, for example, you have 500,000, or let's just simplify it, you have 100,000 that you want to invest, a maximum of 75,000 should go to one asset class. Maximum, so it can be lower, right? Then another asset class or other asset classes can share the remaining 25%. So for the if you are a young person, then you can take more risk. So let's say 60% or 65% of your investments should go into stocks, then the remaining ones should go into mutual funds or bonds, as the case may be. When you are investing in stocks, for example, you want to spread your money across different industries, asset classes, and countries according to your risk tolerance. What do we mean? Coming back to Assessworth, right? Please look at my screen. Come to Hall of Fame, right? So this Hall of Fame actually shows you all the companies in Nigeria. You can select the United States, for example. So we are looking at stocks. You can go for ETFs, for example. So you can, let's just look at show all. So these are all the stocks in Nigeria according to their market capitalization. The highest is BUA Foods. Now, you can filter them according to the industries. So according to the industry, let's say you want to look at agricultural services first. So now you're looking at Presco, Okomu, Ella, FTN Cocoa, and livestock. Now, this is the market capitalization. Presco has 1.64 trillion in market cap. Okomu slightly lower, livestock 22 billion. So if you want to invest in stocks, for example, choose one or two from an industry, move to another industry, spread your money across different industries, so that if something bad is happening to one industry, your money will be secure. Let me give you an example. Let me give you a very good example. So a lot of investors now are investing in Presco, Okomo Oil, Lakes, fine and goods, right? It's good that you do that. But what if we hear that there will be a low-cost infestation? You know those ones that usually happen in West Africa. So I think almost every year, almost every 2 years. But our saving grace here in Nigeria is that even though the low cost, they travel northwards, they go towards the Asia region. They don't come towards West Africa. Had it been they were coming here now, you as an investor must consider all these low costs, all these pest infestations. Why? Because if they come to Nigeria, a significance of the palms or the trees that these our agricultural companies have, right? You know what is happening. Or the company that will be listed on the NGX next week is AgroAllied. They have a lot of chickens. They have a lot of eggs. We all know what happens to poultry farmers. Those farmers are some of the, in fact, God sent those farmers to this earth because they suffer a lot. From this year's bird flu to next year, they won't even know what is happening, but they'll just see that the birds are dying. And before a new batch of birds come, they must sterilize, if not problem. So these are some risks. So if you invest only in the agri space, for example, the risk that something bad will happen to your company, to your stock, is high. But if you put some money into agri, you now put some money, for example, into another industry. So let's look at health services, right? Now, this is something different. Now, let me show you something. Are you aware that there could be a negative correlation between the agri sector and the health sector? Let me prove it to you. When the poultry farms are complaining that their birds are dying, who would they run to for drugs? Is the health sector. So what we are seeing here is that the downfall of the agri sector due to the death of livestock, due to the death of plants, could mean more revenue to the health sector. So as you can see, when you spread your money, there's a likelihood that when one investment is going down, the other one could be going up, or, so that's what we consider. Then looking at the market cap, look at this. Micro is worth over 890 billion in market capitalization. Um, NIMET is worth over 43 billion in market cap. We have this Pharma Deco is worth around 390, that is less than 1 billion in market cap. So if for any reason you want to buy at more than one pharmaceutical company, it may not necessarily make sense for you to just buy Meteor and Fitting, right? Because they are, even Fitting is, okay, Fitting is quite low, but let's assume that their market cap is almost the same. Just spread it. The major reason is this. These large market cap companies, they may be overpriced or whatsoever. Then in the case of these small market cap companies, they may be more risky, so you don't buy only them. That's it. I think I've taken more time in this explanation. So yeah, basically, this is it. Thank you. So in conclusion, start investing. Then you have to be very intentional when you are investing. Be very, very intentional when you invest. And no matter what you choose to invest in, try to understand the risk and the rewards. Please come back here again, right? Let's test for example, GTCO. So this is GT Bank, because we love showing this to you. This is the earnings per share of GT Bank. This is the price to earnings. Now look at the dividend yield of GT Bank, 13.84%. So what this simply means is that if you had invested in GT Bank 1 year ago, you would have gotten 13.84% of your money back, and you still have your capital. Now look at this. This is the observed effective yield of GT Bank, 24.52%. So how do we calculate this? Is the compounding rate of GT Bank. So see, in one full year, please look at my screen. In one full year, GT Bank increased by 70.6%. But now, from January 17, 2025 to January 17, 2026, this is when GT Bank made 70%. What about from January 17, 2024 to 2025? What about from January 17, 2023 to 2024? So we look at the average growth rate annually, not average, but the compounding growth rate annually for 5 good years. So look at it, 5 years. We look at it and show you the rate at which this specific stock is compounding. You'll see it here. What about the risk exposure? This is the likelihood that the GT Bank stock will go down as opposed to go up. So as you can see here, GT Bank is 38.52%. So as an investor, we'll ask you, what is your risk exposure? That is, what is the maximum fear? That is, what is the maximum amount you will want to lose before you start panicking? If, for example, you say you do not want to lose more than 20% of your money at a time, and the risk exposure of GTCO is around 38.52%. The question now is that, will you be safe when you invest in GT Bank? Now, just in case you don't understand this very well, let's come back to this technical analysis page, right? Compare GT Bank with the index. So GTCO versus the NGX All Share Index, right? Coming to number 2. So mind you, as an investor, you said that you do not want to lose 20% of your money at a time. So, but as you can see, yeah, GTCO lost around 28.47% sometime. That is the downside. Sorry, this is the downside risk exposure, 28.44%. Now, looking at the worst period, GTCO price started dipping in July 30th, 2025. And even till now, it has not recovered. However, the deepest point was in November 11th, 2025. So from July 30th, 2025 to November 11th, 2025, GTCO dipped up to 23.49%. But now as an investor, you say you do not want to lose over 20% of your money. Let me make this more intuitive for you. You invest 100,000 naira into GT Bank. You say that you will not panic if you see that your 100,000 is now 90,000. That is losing 10%. But you will panic when you see that your 100,000 is now below 80,000. That is losing above 20%. But had it been you have invested in GTCO, that is in a year's time from today, you would have seen your money being around 76,000 something naira. So the question is that, would you have panicked? If yes, then you need to invest in something that will not give you high blood pressure. So that is it. Thank you so much, Joshua. We should move on to the questions and answer now. So Joshua, over to you.
Okay, thank you so much, Rona. That was very insightful. First of all, before moving to the questions that we're asking the group, I don't know, does anybody have any question so that we can get to answer that before moving to the questions that we're asked in the group? Because the questions in the group were a whole lot. So, yeah. Okay, I can see Great his hands. Please, Great, you can unmute and
Good afternoon. Good afternoon, everyone.
yeah, good afternoon.
I really want to appreciate the management of Assessworth. They are doing a very fantastic job. In fact, we that just started the stock exchange investment, we are very much abreast with the basics and other things too in a short while that will join Assessworth. And my question is this: I want to ask, is it can we say that we can use Assessworth all that they have in the platform? Can we use it as a basis or bias to know which stock to buy? That is what I'm saying, is that can we depend on their facts and figures that they are giving on the platform per time to, like, I
All
want
right.
to go
Yeah.
investment. I believe you understand, sir. Let me not waste time.
Yes. Thank you so much. So in the community, right? If for those of us in the community, we remember what happened, I think, 2 days ago, when somebody, oh, I wish I could have opened some of all these things. When somebody dropped a figure, right? I think the person dropped a figure from Carrywise. Yeah, I'm making mention of the name because it happens. So Carrywise puts the MRF value in a particular stock, but that stock did not have that MRF value on Assessworth. So the person was asking, why is Assessworth's figure different from that of Carrywise? And we have to show the person from NGX Direct that Assessworth's figure is actually correct. So Assessworth, what we are seeing here on Assessworth is real time. So what do I mean by real time? Let's look at this. Look at year over year. Or mind you, this observed effective yield, right? When I was giving you the explanation, for example, I said from 17 January 2025 to 17 January 2026. So 17 January 2024 to 17 January 2025. 17 January 2023 to 17 January 2024. What this simply means is that Assessworth uses real time. So all these figures that you are seeing here, they can change any seconds or any moments from now, simply because just the way a stock's price is not fixed, that is how these things are not fixed. Assessworth is the only platform so far, we even dare say in the whole world, that gives you real-time figures. So the moment something changes, you see that it changes. So for those of us that are tracking our portfolio on Assessworth, we already know this one, that as soon as something happens to the stocks that you are holding, such as they want to pay dividends, or there's an insider buying or selling, or a specific significant news happens to that stock, you see that it is already in your email, even before news starts publicizing it on. No, so mind you, let me just tell you, it is not one individual that is coming to type this news for you. It is the Assessworth platform itself that is telling you. So our everything here is real time. Now, looking at GTCO to prove this to you, let's look at the view financial trends. So as you can see here, we have all the years up to 2024, simply because GT Bank has not released their 2025. However, when you look at the quarterly numbers, we have all the quarters of GTCO up to 2025 quarter 3. The reason why there's no quarter 4 here is because GTCO has not released quarter 4. As soon as the quarter 4 comes, immediately you will see it here. So Assessworth gives you real-time data, and this is data that you can trust. I want you to do something. If you have the chance, carry out your own research. For those of us who use Stanbic IBTC, stockbrokers, I want you to search for any specific stock with Stanbic IBTC. When you click on it, look at the EPS. Or if you are using Apri Invest, the web platform, search for any specific stock, then look at the real time. You will see that the EPS and PE from Stanbic IBTC is different from the EPS and PE of Assessworth. Then you see that the free float of Apri Invest is different from the free float of Assessworth. Then on your own, do your own independent analysis. Go and check the official financial statements of the company or from NGX. You see the Assessworth uses real time. So mind you, let's even prove it to you. Looking at GTCO here, right? Let's prove it to you that this is real time. See, we are seeing that the earnings per share is 18.05. Then we said TTM. Where did this 18.05 come from? Come back here. Let's look at the view financial trends. Looking at from total revenue, let's select earnings per share. We see that the 2024 EPS is 35.44. We also see that we do not have 2025 yet. So the billion-dollar question is that where did Assessworth get its own, what was the trailing again? The trailing is 18.05. So where did Assessworth get this 18.05 from? Very, very simple. So what we do is that, coming back to the financial trend, look at the quarterly numbers, then EPS. So here you go. So we are looking at, we'll count the last 4 quarters. You know that a year is made of 4 quarters. So we count the last 4 quarters, sum it, then you have your now recent EPS. So what happened is that even if GTCO does not release a full year financial statement, they release another quarter, we will not wait and still be using the EPS of 2024 because there's no 2025 yet. No, it is updated immediately. This is only present in Assessworth. No other Nigerian platform has that one. Now to ask you, considering that I have shown to you how real time and factual the data is, Assessworth truly is what you can trust. Now, if you look at the artificial intelligence page, because of time, I don't think that I can be able to analyze any figure here, but I can view history, right? Let's look at what the AI thought about Vital Foam. So see how the AI, for when it analyzed Vital Foam, right? See how it is giving you the real-time figure for the profit. So when I mean real-time, I mean as of when this analysis was done, which is December 27, 2025. It is giving you these real-time figures, analyze them all for you. It will show you the valuation of Vital Foam. If Vital Foam is undervalued, overvalued, it will tell you the risk exposure it thinks about Vital Foam. It gives you other consideration, then it gives you a final verdict. Why? Because we have factual data. Now, just in case you want to compare 2 companies as well, because of time, we can't do that. So let's look at Okomo versus Presco. So it will look at their strengths, compare their weaknesses, compare them heads to heads. It will now do the valuation for you. It will look at their risk exposure, then tell you which one is best for you. So if you look at it, you say that Presco is the stronger overall pick with better valuation, higher growth, and superior risk-adjusted returns. Choose Presco if you seek upside and scale. Choose Okomu only if you prioritize maximum yield and lower market sensitivity. Now, let me explain this thing for you, right? If we know what is happening in the markets, we know that Presco, as at late last year, they started this expansion, buying more and more lands that they want to expand to. Now, that is fine and good, but with expansion comes risk. We know what happened when Edo State government, that news that they posted about Presco, when they said that they seized the land until it came out not to be true. Now let's assume that it was true, or let's assume that some of all these press school that all these companies that press school is going into, something happens. That something that happens is the uncertainty that we're talking about. So even if Presco is expanding and you have the higher chance of making more money in terms of capital appreciation with Presco, Presco now has the higher risk exposure because of that. What if that's something that will happen? As opposed to Okomo Oil that has not made any significant move when it comes to expansion, but Okomo Oil is paying a good dividends, the price is still growing well. So this is what the AI analyzed and showed you that choose Presco if you seek the upside, but now choose Okomo Oil if you prioritize the lower market sensitivity. So as you can see here, Assessworth, the platform, is not just here to think, or as the case may be. We'll have the data and we are giving you the real-time analytics. So I don't know if that answers your question. Great.
Yes, yes. Thank you, sir. That very much did justice to it. Very quickly, sir, my last question. I want to ask this concerning this CHN. I'm getting it confused. I know, I have known now that CHN is just like my BVN in my bank, and CSCS number is like my bank account. Different platform can give me different CSCS, but my CHN is supposed to be one, as in normally it's supposed to be one registered under
Yeah, but now
CS.
you have multiple CHN.
Yes, so I have two CHN now, and I have
No
different
problem.
platforms. I don't know. Can I go
No
ahead and still
problem.
use them to invest?
No problem whatsoever. Yeah, you can use them to invest. However, you can actually apply for a CHN consolidation. So with CSCS, that is the clearinghouse of Nigeria, the CSCS, the organization. If you are in the community, the link up to CSCS is in the community. Otherwise, you can write to us through contact us so that we have your number. Then we'll have your email address. Then we'll share the link with you. You can actually use CSCS to apply for a CHN consolidation. However, you don't have any problems for now. You can have multiple CHN, but it makes more sense for new investors to have the same CHN, but all fine and good. So no problem. Thank you. Anything
Thank,
else?
thank you, sir. That will be helpful.
All right. Thank you. Joshua.
Okay, thank you so much. Thank you so much, Mr. Great. I think in the absence of any other question, we have to move to the questions. Okay,
I think someone else.
Hannah, you can unmute.
Hey, hi, Joshua. Good evening. Okay, so my question is just a quick one. What's the least amount? What's the lowest amount you can use to invest or buy stock or any of these things that can be bought?
All right.
Yeah.
Thank you so much. So there's no lowest amount actually. So let's come back here. Coming to GTCO, right? I believe you can see my screen. So as you can see, GTCO's stock price is 98.95 naira per share. Let's go to, you are a new investor, so I won't go to Ella Lakes. Let's go to, okay, here, let's look at Access Corporation. I know that some people will cost me because I'm bringing this stock, but no problem. Look at it. The stock price is 22.75. So simply put, one share of Access Corporation is worth 22.75. So if, for example, you have 1,000 naira, how many shares can that give you? Let's look at it. 1,000 divides 22.75. It can give you around 44 Access Corporation shares. So now that is up to you. So you can even invest with as low as 1,000. But the problem here is that some stockbrokers, that is the apps that you use to buy the stock, some of them don't want you to go below 5,000. Some don't want you to go below 3,000. So for example, CarryWise has a limit. I think Bamboo also has a limit, but Stanbic IBTC does not have a limit. So yesterday, what happened to me was that, no, not yesterday, the day before yesterday, when I wanted to rebalance a portfolio, right? Or the day that there was pullback, when I wanted to rebalance a portfolio, right? When I sold and bought a whole lot of stocks, I saw that the money in the account was remaining, should be 1,000 something. Yeah, I think it should be remaining 1,000 at the time. I still use that 1,000 to buy this stock, May and Baker. This is not financial advice. I'm just like showing you. So I bought this stock. I've forgotten the price that I used to buy this stock, but yet it went through. So there's no minimum account amount if it's stock. If it is a government bonds, for example, like the FGN savings bonds, I think the minimum is 5,000 naira. And I think for Sukuk bonds, the minimum is 10,000 naira. Then I think that for most mutual funds, especially the Stanbic IBTC mutual funds, the minimum is also 5,000 naira. For commercial papers, usually if you want to buy the commercial paper directly from the issuing houses, etc., I think the minimum is around 5 million. However, some solutions are coming that will give you a minimum of 100,000 naira. So that's it basically. But I just show you for stock, yes, you can buy it with as low as 1,000 according to your stock broker. I don't know if that answers the question, Anna. Yeah, Joshua.
Okay. Thank you so much for the clarity. So I don't know if Hannah is still here, but I guess you've answered her question. And let's move on to the questions that we had on the group. And the first
Okay.
one says, how long can you hold a stock before you can take away your profit? So this person is asking a question of how long
Yeah.
can he or
Yeah.
she hold a stock to take profit?
So it's according to the type of investor that you are. If you are a long-term investor, that is, you are investing for the long term, the question now is that what do you really mean by take profits? Because there are multiple ways for you to gain, to take profits from a stock. You can either sell your shares. So when the share price has increased significantly, you can sell it. So that one is the capital gain. You've taken one profit. Or you can collect your dividend. Instead of reinvesting it, you spend it. That is taking profits. So for the case of dividends, when the dividend comes and you do not want to reinvest it, you can take it. It's not by force to reinvest. Don't mind Twitter influencers are always saying, yeah, reinvesting is good though. But what if your investment goal is to get this annual cash flow that you want to use maybe to pay your child school fees? Then the company has paid you your child school fees as for investing. Someone is telling you as dividend. Someone is telling you that if you don't reinvest, you are a poor investor. It's not good. It's according to your goal. Now, if you're a long-term investor, the only reason why you should be even thinking of selling a stock is if the stock you don't think it will do well anymore, or there's no dividend anymore. We have the likes of Warren Buffett that held stocks for over 20 years, like the Coca-Cola stock and some other stocks. So for long-term investors, no need to sell. For short-term investors, the time to sell is not necessarily duration based. That is 1 year. It's according to your micro goal or your micro strategy. If your strategy, for example, was being a value investor, so by value investor, you look at undervalued stocks. You buy this undervalued stock, then you hold them until the market gives them their right value. So the question now is that how did you know that the stock is undervalued? There are two ways. Number one, look at the current price of the stock. Then number two, look at the price you think that that stock should actually be worth. Fine. Now you've analyzed multiple stocks and you've seen that this stock indeed is undervalued. What do you do as an aggressive investor? You buy the stock. Then when do you sell it? You sell the stock when the stock becomes fairly valued or when the stock becomes overvalued. Why? Because you bought it when it was undervalued and you want it to become fairly valued before you sell it. So what I'm trying to say is that there is no definite time or duration. Say hold it for 3 months, hold it for 6 months, then you sell. No, it's according to why you bought it in the first place. If you bought it for the purpose of long-term holding, So long as they continue to pay dividends, so long as their revenue continues increasing, as the case may be, no problem for you. You are fine and good. Then by the time you decide to sell this stock, you have significantly more, right? Now, if you bought it, so that's it. No need for many talk. So let's rush the questions, Joshua, because of time. Thank you.
Okay, so the next question says, what is the best market to invest in NGX or foreign market?
Okay.
That is just what is the best market to invest, NGX or
Yeah,
foreign
whether
market?
Nigeria or foreign market. All right. So
Yeah.
as a Nigerian, it makes sense that you invest in Nigerian companies. Now, let me show you the reason why. Come to this Market Watch page. So this Market Watch page is a page where you will see the different news that is happening. So today's date is what, 17. So even today that is Saturday, you still see all the news relating to the stocks that you hold, right? So you'll see if the news is a good news or a bad news for the stock. If you want to know, click on the stock, then you see what the impact of the news on that stock. But why we are here is here. So the current exchange rate of Naira around 1,400. Nigeria's inflation rate is 15.15. Nigeria's interest rate 27%. Then our risk-free rate is 16%. Now let's look at that of the United States, right? US inflation rate is 2.7%. US interest rate is 3.75%. US risk-free rate is 4.17%. What this simply means is that if you invest in a United States stock, for example, and the stock gives you 5% annual returns, you as a Nigerian, you lost. Why did you lose? Because your inflation rate is already, look at your inflation rate, 15.15%. Therefore, you actually lost money. Even if your 1,000 naira is now, for example, 1,040 naira or 1,400 naira, the case may, 1,040 naira, that is, you gained 4%, but you lost money. Why? Because inflation rate means that the prices of things in Nigeria from 1,000 naira will be greater than that 1,040 naira. However, people living in the United States are fine and good simply because look at the inflation rate. So the price of things will move from 1,000 naira to 1,027 naira. But now your money is worth 1,040 naira. So you still gain. Now let's look at something else. Let's look at Apple, for example. Coming to Apple, right? Click on quick options, then click on view advanced statistics. Look at this CAPM return. This capital asset pricing model return is what you as an investor must get from this stock. Otherwise, the stock is not a good investment. So let me tell you what you mean. Remember, we said that stocks are risky. So why not invest in a government bond that will give you, for example, 15%? Because if a government bond gives you 15%, that is Nigerian government bonds. If it gives you 15%, you are okay. But now you say you want to invest in a stock. So the question now is that why not invest in the entire market? So maybe invest in the NGX All Share Index or the NGX 30. So I think that NGX 30, let's look at something, please. Sorry, please, permit me some time. Assets versus index, coming to MTN once again. So in one full year so far, coming to returns. So in one full year, NGX 30 gave around 62 points. Sorry, this is NGX All Share Index, 62.283%. What is we are looking at from January 2025 to January 16th, 2026. NGX All Share Index gave 62.2828%. Now, we said that if a risk-free security such as the government bonds gives 15%, then the entire market gives around 62%. if you want to buy a stock that is riskier than the entire market, shouldn't that stock give you more returns? To prove it, let's come to MTN, for example. So I think, no, I think the beta of MTN is quite low. Let's look at something with high beta, maybe go to GTCO, for example. Right, then click on advanced statistics. Coming to the capital asset pricing model for GT Bank. So because GT Bank has a low beta, so this is what, if you get this one, it's not bad. So this capital asset pricing model looks at the volatility. So, but what you will notice now is that coming back to Apple, let's look at 3 different US securities. Right, come to Apple, click on view advanced stats. So look at Apple. We say you should require 13%. Let's go to NVIDIA. We say that you should get that NVIDIA is US. We say you should get around 25%, right? Now let's look at, for example, Ella Lakes, which is now Nigerian. View advanced stats. We say you should get 34%. Let's look at which other one should we look at? What is a volatile? Let's look at Access. I think Assessworth. Assessworth is also okay. Looking at the view advanced stats, we say you should get 32%. So what are you seeing here? What you require in Nigerian securities is higher than what the US securities require. Why? Because their inflation rate in US is low, their interest rate is low. In the case of Nigeria, your interest rate is high, your inflation rate is high. Therefore, why do you want to invest in a market that even if they give you significantly lower than what you should get because of your inflation rate, they are still fine and good, right? Just in case you want to know, click on this, should I buy this stock? Then see quick ratings here. You click on your investor type, right? Now we look at inflation adjusted return. So we say that Assessworth's expected return, which is 18.59, is greater than our inflation rate. So currently Nigerian's inflation rate is 15.15%. So this simply means that considering inflation rates, Assessworth is actually okay. So you want to check if the expected return, which is this one here, is actually higher than your inflation rate or not. Thank you, Joshua.
Thank you so much. So in essence, the inflation rate plays a key role for us choosing which market to invest in, right?
Yes, exactly.
Okay. So the next question says, what are the PE value for estimating whether a stock is overvalued or undervalued?
There's no definite PE. So for those who do not know, PE helps you estimate the value of a stock. So for example, looking at Access Corporation, Access Corp PE is 1.62. When you go to GT Bank, right, the PE, for example, is 5.48. Then when you enter Wema Bank, the PE is around 3.35. So let's say that the average PE that we are seeing here is 3, right? Let's say that the average PE is 3. So in simple terms, Access Corporation is undervalued than GT Corporation. So it's not necessarily there is a definite PE. That when the PE is 5, it is undervalued. When the PE is 10,000, it is overvalued. No, you have to compare the PE to other stocks in the same industry. Or if you are a strict investor, then you have your own PE. So some investors, for example, or some analysts will say, no matter what, they do not want to pay over 10% for the earnings. So they will say, if a stock has a PE above 10, then they will not buy it. Now, we have some stocks in Nigeria with very high PE. So, for example, coming to the Hall of Fame page, right? Select, I think this is the PE ratio, right? So as you can see, these are some stocks with high PE. Look at Geregu has a PE of over 100. This is Transcorp Hotel 89, Champions 54, Guinness 45. Then we have some stocks with low PE. So mind you, when the PE is negative, it means that the company is currently making a loss. Therefore, you do not want to look at negative PE because they give you wrong figures. So at the present time, Assessworth even has the lowest PE that is not negative, 1.62. This is BAC PLC. This is EcoBank. UBA has a PE of 2.2. So yeah, there's no definite answer. Thank you, Joshua.
Okay, thank you so much for that. So another question says, should we buy Dangote refinery? So assuming this is listed, should we buy Dangote refinery?
Okay. So not financial advice though, but my honest opinion, right? Dangote has already announced that he will be giving 10% of the company. It means that the free float of the company will be 10%. Will that be liquid enough? Now, mind you, that 10% that we are looking at is not for retail investors such as you and I. That is for everyone. So all the mutual funds, all the institutional investors that want to buy the Dangote cement, they will all be trooping into it. So the institutional investors will hold their own part. So let's say what will reach the retail investors self. Let's say like like 4%. I'm even being liberal here. So let's say 4%. Now we all know the hype. Even people who have not bought stock before, when they hear Dangote refinery wants to list, everybody will want to troop in, both the investors who have knowledge and the investors who have no knowledge. So what will happen is that stock price, expect that stock price to go more than 10% every day, more than 10%, more than 10% for maybe a week, 2 weeks, 3 weeks, a few months. You'll just see the price going up. So I think as intentional investors, we should not rush to buy that company. While people are tripping in, you can use your money. So what happens is that if you really have eyes, you see that money is quite limited. You have a money in one stock, you want to buy another stock because you feel like this new stock is doing better. So you sell that stock, then use the money to buy the other stock. So you as an intentional investor, when the Dangote cement, the time to list is coming, right? Look at the stocks that people are selling, but are still fundamentally strong, and you think that will do well. Just buy those stocks, right? Then when you feel it is time, Dangote cement, maybe the real price, the price discovery has occurred, you can go ahead to buy it. Or if you really want to buy the Dangote cement, there's a strategy called the dollar cost averaging. For in the purpose of Nigeria, let's call it Naira cost averaging. So you have 100,000, for example. So instead of buying the Dangote cement with 100,000 immediately all at once, you will now say the first day you buy like 20,000 watts, you wait a month, you buy another 20,000, you wait a month, you buy another 20,000. So what happens is that no matter how volatile the price is, whether it is going up or it is going down, you now have an average price. So what means is that even if you will not have as much profit as the people who bought the stock in a very low price, your loss will not be as much as those who bought the stock in a very high price. Thank you, Joshua. So let's try to rush the remaining questions. Thank you,
Okay,
Joshua.
thank you so much for that. Thank you so much for that answer. So the next question is, how do I move my shares from one stockbroker to another?
Okay, so you have to contact the new stockbroker you want to move your shares to. Start with that new stockbroker. Although it's quite a non-straightforward process. Trust me, that process will stress you. But contact the new stockbroker you want to move your shares to. They will guide you. Thank you, Joshua.
Okay. The next question says, what are the key parameters to look out for when doing a research on a company to invest in?
All right, thank you so much. So you want to look at the revenue. Coming back to GTCO, right? Looking at the financial trends, look at how the revenue is increasing. In layman terms, right? What is revenue? Revenue is simply patronage. So when you have a stock, for example, you have a store. Let's look at ShopRite, for example. We all know what's happening to ShopRite recently in these days in Nigeria. their customers are reducing. Yeah, the customers basically are reducing. Then me self, sometimes because I want to be a loyal customer, I'll say, let me still go to that shop price. But when I go there, the shelf is empty. So I end up not buying anything, right? So financially, what did my attitude and the attitude of ShopRite themselves of not having many customers anymore, what this simply means is that their revenue will drop. So patronage is an intuitive way to look at revenue. Revenue look at how much money is coming in based on customer patronage, as the case may be. People who are buying the products, people who are buying the services, like people who are paying for the services. If the people are reducing, the revenue will reduce. If people are increasing or is stable, then goods to go. So as an investor, one of the key things you should look at for is this revenue. And thankfully, Assessworth here has it. Now, mind you, right? You can actually look at it here. So it shows you if the revenue is increasing. It also shows you how long the revenue has been increasing. So for quarterly numbers, please mind you, right? It doesn't make sense for you to compare the revenue of one quarter with another quarter. Therefore, when you are comparing it here, instead of comparing quarter over quarter, click on year over year. So this will better tell you if the revenue is increasing year over year or not, and it will help you better. So aside from revenue, you want to look at what your gains are. So coming back to GT Co, right? Look at the dividend yield, 13.84%. So likely you get 14% of your money back from dividend alone. Look at the observed effective yield, 24.52%. So you likely get this or around this in terms of capital appreciation. Now you can compare GTCO with, for example, let's compare GT Bank with Access Bank. Come in here, look at the GT Bank, look at the that of Access Bank, 8.49, but GT Bank has a 13.84 dividend yield. The effective yields, GT Bank 24, Access Bank 18. What about year over year return? In one full year, GT Bank has given 70.6% in capital appreciation. Access Bank minus 5%, minus 6%. Coming to their fundamentals, see, in terms of revenue, yes, Access Bank has the higher revenue than GT Bank. But looking at the profit margin, see, GT Bank has a 31.08% profit margin, while Access Bank has 11%. Just in case you do not know, profit margin is that out of every 100 naira that GT Bank and Access Bank got in revenue, GT Bank saved 31 naira as their profits for themselves. But Access Bank were able to save only 11 naira. So as you can see, we are clearly, what about the PE? Yes, in terms of PE, Access Bank is more undervalued than GT Bank. But when it comes to return on asset and return on equity, GT Bank is giving more. So we are seeing here that GT Bank is actually a better choice. However, if you cannot read these numbers, I know it may be tickling some of you. Just click on this Ask AI that is here. The AI will compare both of them for you and tell you everything. Thank you, Joshua.
Okay, thank you so much then. The next question says, how do you sell your stocks and as well know the right time to sell?
Okay, how do you sell your stock? You search for the stock in your stockbroker app, then you sell the number of shares. Then to know the right time to sell, we've discussed this before. It's not time based, neither duration based. It is based on what you are seeing in the market. For example, if you bought the stock because it is undervalued, when it becomes fairly valued or overvalued, you sell. If you bought the stock because it is paying high dividends, if it stops paying high dividends, you sell. If you bought the stock, then you notice that the revenue is dropping, you start to panic. If you bought the stock, then you see that there's a regulation problem, like what happened to ASO savings, you start to panic. So that's just it, basically. It's actually not duration based, it is strategy based. Thank you, Joshua.
Okay, the next question says, the current NGX index and stock prices, is at a premium or is at a premium. Sorry, let me take this again. The current NGX index and stock price, is it at a premium or not? When is expected market correction coming?
Okay, so I don't really know what this person meant by expected market correction because remember that NGX all share index is looking at the average return of all the stocks in the NGX. Then NGX 30 looks at the average return of the top 30 largest stocks. But looking at the NGX ASI, right, it looks like at the average return of all the stocks. So what it simply means is that some stocks can be overvalued, some stocks can be undervalued. That's just it. It's not as if when the all share index comes down, then all the stocks will come down. It simply means that most of the stocks came down or the larger market cap, because when the stock have the largest market cap, it influences the NGX all share index over a stock with the lower market cap, right? So are we expecting any price correction? Okay, fine. But the price correction is not necessarily because the company is not doing well. The price correction could simply be that even if the company is doing well, investors are now paying significantly more for it. So let's look at an example. Coming to Geregu, we all know what happens to Geregu when this man, Femi Otedola, he sold his shares. Look at the PE ratio of Geregu. It's 100.75. That is the PE ratio. If you want to look at another stock in this same industry, that is utilities, come to Hall of Fame, right? Come to Hall of Fame, select the industry, select utilities. Where is utilities? This is utilities. So there are just two stocks. Then select the PE ratio. See how Transpower PE ratio is 25.69, Geregu PE ratio is 100. So if for any reason, well, not for any reason, we've already seen that a prominent investor such as Femi Otedola, he has sold his stake. So let's still assume that for any reason whatsoever, they want to be a price correction between Geregu and Transpower. Which one do we think will be mostly affected? Is Geregu. But it doesn't mean that all the stocks, including Transpower and other ones not in the industry, will also be affected. It simply means that the stocks that are perceived to be overvalued, those are the ones that will lose their value. We all knew what happened, or no need for many talks because of time. So yes, thank you, Joshua.
Okay, thank you so much. The next question was still on price correction, but you've answered it. It says, the next question says, what asset class should I be bullish on?
It's according to the type of investor that you are. If you are a very new investor, you want to consider mutual funds, bonds, then have very low exposure to stocks. Only enter stocks when you start understanding the basics. So when you join the Assessworth community, use the Assessworth platform, it will actually help you better. Only that's when that's the only time when you should be bullish on stocks. But if you want to take high risk and you're looking for higher returns, of course, there are stocks, there are cryptocurrencies, etc. So it's all up to you. There are even commercial papers. Thank you.
Okay, so how do one participate in right offers?
So if you have the stock of a company and the company tells you that they want to raise more capital, they will notify that your registrar or the issuing house will notify you that you can participate in this right. If you can participate, there's the form you fill. It's very intuitive, actually. So for the purpose of this thing, on Assessworth, just track that stock. That is, add the stock to your portfolio. Click on this button, click add remove assets, right? Search for the stock, click on the portfolio you want to add, then basically, right, add the stock to your portfolio. Why? When you add the stock to your portfolio, any significant news that is happening to that stock, such as right issue, public offer, insider trading, etc., you will be one of the first persons that will be notified. Then you'll also know where to go from there. Thank you.
Okay, thank you so much for that answer. It says the next The next question says, can I continue to buy blue chip stocks like periodically, either weekly or monthly, with the hope of
Yes,
investing for long term, 2 to
yes,
5 years, irrespective of the price fluctuation?
yes. If you are interested in the blue chip stocks, like the blue chip stocks, now you are looking at the industry key players, the large cap stocks, those in the apologies. So yes, those are the type of stocks that you are looking for, right? What this strategy you just highlighted is what we call the dollar cost averaging. What we use, that example we gave for the Dangote cement, right? So yes, if that is what you want to do, fine. The what you must consider is that the stock must be fundamentally sound. Are they increasing in revenue? Is their dividend payments increasing or decreasing? Is their profit margin increasing or decreasing? Are there better opportunities in the market? So you consider all these things. If the company still matches your criteria, then fine, go for it. Thank you. Instead of stock, you can also consider doing it for mutual funds. Thank you.
Okay, the next question says, how do I know what to look out for in a statement and make better choices?
Yeah, we've actually looked at that. Revenue, profits, profit margin, book value. It's all there waiting for you. Thank you.
How do I optimize Assessworth for smart portfolio tracking?
Okay, so I showed you how to add a portfolio, add a stock into your portfolio, right? So when you click on this portfolio tracker here, it's actually all encompassing. In fact, the page is a whole lot. So you see your net worth, you see your capital appreciation, blah 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 blah. Then you will see some tips. Okay, it said that multiple active portfolios. So let's select one specific portfolio, right? So we've selected a specific portfolio now. So there are three tips for us. Too much risk, too little returns. It will analyze your portfolio, then show you this one. You can go to the next, you can go to the next. You can look at so looking at the industry, financial services is 40%, agricultural service 34%. So you want to spread your money across different industries. If you can use these portfolio utilities, so you can analyze your portfolio with artificial intelligence. So you can either do a quick portfolio analysis or full portfolio analysis. Let's look at history, please. So this is a quick portfolio analysis, right? It will just show you your portfolio summary, performance, diversification, risk profile, just the strengths, the weaknesses, other considerations, then verdict. Then if you say you are ready to really see the really truths in your portfolio, right? You do the full portfolio analysis with the AI. So something like this. When you look at it, it shows you summary, it gives you performance overview, risk overview, diversification overview, income overview. So for example, it shows you the companies in your portfolio that are paying dividends, the ones that are not paying dividends. So it says overall income is solid, but depends heavily on a small group of high yield stocks. It shows you your assets contribution. So look at it. Assets Corp, for example, in this portfolio, Access Bank is making loss, adds financial exposure and idiosyncratic risk without helping returns or income. It shows you all the stocks in your portfolio and what they do in the portfolio before it shows you the problem stocks. So in this portfolio, look at the problem assets. So it said that while Zenith Bank has a good yield, the alpha is low and the growth. So like this is full. As you can see, this analysis of this portfolio is full. This is what the AI does for you. Or click on find great or poor holding in the portfolio, for example. Just click on any specific stock. So for example, NACO, then analyze. So this one is not AI, but it will show you the impact of this stock in the portfolio, if the stock is actually doing well or not. So at the time when we invested in the portfolio, when we started investing, this stock is around 3% of your net worth. But as of now, the stock is around 4%. What this means is that the stock increased in value. We go next. We see that the stock has a capital gain of 77%, but your overall portfolio has 33%. So if you had invested only in NAPO alone, you would have gotten 77 as opposed to 33%. So just go next. You see the impact of NACO, everything you need to know. Then if you're a numbers person, all the numbers are here for you. You can even set a portfolio. So coming back here, you can set a price alert. So for example, for your for your entire portfolio, for example, so this portfolio has a total return of around 44.68%, right? So you can set an alert that then a net worth of around 270,000, right? So mind you, this is a sample portfolio, right? What we use for explanations, right? So the net worth, for example, you can set an alert that you want this net worth to be around 300,000. So when the portfolio is now worth 300,000, so increasing to, you'll be notified. Or currently it is 261, but you are afraid of risk. So you say you want to be notified when the portfolio is worth 200,000. So when this one, 261, it drops to 200,000, you'll be alerted. You can do this for not just for net worth, but also for total return. Now, instead of entire portfolio, you can do it for a specific asset in the portfolio. So this is good, for example. So for those of us who are asking, when should I sell this stock? This is actually for you. This stock was worth 20 naira in price, but you believe that it should be worth 25 naira. That is how many percent profits. So you now set the price alert. When you buy the stock, you set the total return. When the stock has given so percent in total return, you bring it back. These are some things that you can gain. Now, for those of us, so long as you are tracking a stock, you see all the stocks that you are tracking in your Assessworth portfolio, you get notified immediately if there's any significant news. So looking at this insider trading, for example, so for those of us who track Austin Lars, you can actually add Austin Lars here. So when you set this notification, if Austin Lars, an insider, trades Austin Lars shares, you'll be notified. For dividend payments, so this is the dividend corner. Currently, we have two upcoming dividends payment, which are Vital Foam and Nigerian Infrastructure Debt Funds. Even though that of Geregu has been announced, it is yet to be officially submitted. But as soon as it's submitted, you yourself who is tracking portfolio, you know that you get the notification immediately. For the market watch, every day you see what is happening in the market according to what you are holding alone. Assessworth does not spam you by giving you all the news. It only tells you the news that is specific to your holding. So yes, with Assessworth, you can become a smart investor. Thank you, Joshua. I think we can take like two questions more.
Thank you so
I think we
much.
can take like two.
Thank you so
Yeah, I
much.
think we should take like two questions more, then call it a day. Thank you.
I think most of the questions that are remaining here are questions that we've already treated. So going back to it would be more like saying what you've already said before. I think at this note we'll call it a day. And thank you so much,
nice.
Mr. Elijah. Yeah, thank you
Thank
so
you.
much, Mr.
So
Elijah.
do we have any other question from any other person?
What do you think about the new company that is due, new agri company that is due to be listed on the 22nd on the 20th of this month?
That is next week.
Yes.
Yeah, I think that company, so maybe what we'll do is that, so what we usually do on Assessworth is that during any rights issue or public offer or want to analyze a specific company, we do a graphic for that company, then we send it across. So as soon as we have the real-time figures for that company in terms of its annual and quarterly numbers, revenue, profits, free floats, where they are headed, their proposed dividend, etc., Assessworth will do the analysis for that company. Then we'll publish it both on Twitter and in the community. Thank you. So just in case, for those of us who are interested in joining the community but are not in the community yet, right? In this education section that is here, select community, then you select when you put your gender, etc., your phone number, then you select the group you want to join, whether it's the beginners group or the general discussion, you can join it from there. Then For everything that we've learned so far, we have courses in the Assessworth platform that can help you. If you want to learn investing 101, you want to learn about stocks, we have courses here that will even teach you how to value a stock this year. Bond intelligence, smart funds, that is mutual fund, ETFs, etc. You see them all here. Thank you. Any further questions? Joshua. Hello, Joshua.
I was muted. I didn't even remember. So I said, in the absence of any other question, we would call it a day. But before we do that, I would want to also admonish you to go through the Assessworth portal. If you're new to investing, we have our education page that is going to put you through with investing. There's going to teach you from the basics to everything you need to know. And also, our Assessworth is fully packed with a whole lot of things that would guide you through your investment journey. So we are here to hold you through the process. And for those who have not joined the community yet, if you go to the education page, you can also see where to join the Assessworth community. And it's very much insightful because the community is more like a place where like minds and people who care about investing come together to understand what they are doing and to learn more. So thank you so much. I really do appreciate it. And thank you to Mr.
Yes.
Rona, and also
Thank you so
share
much,
the news of
everyone.
Assessworth. Yeah, thank you so
Yeah,
much.
thank you so much. I just thought it's here and we are here to stay. So share the news. We are here to hold your hands. Thank you so much and stay intentional with Assessworth. Take care.